and I think if my math checks out, it's somewhere the year 2140.
Correct.
So like both of us will not even be there already, right? We're like probably dead by then. Back to his white paper. You've read it like at least how many times? Twice?
3 or 4 times, I think.
Yeah. I mean, that's impressive. I mean, I've been in the space for like 5 years, but I haven't actually read his white paper. Hi and welcome to On The Block, a first of its kind Web3 talk show that we have on our YouTube channel, where we talk about basically anything Web3, digital assets, and cryptocurrency related. My name is Marcus, and I'm from Symphony Digital Assets. I'll be your host for today. Today we have with us here Ben Wilton from Fireblocks. Ben, would you like to give a little bit of self-introduction and just what you guys do at Fireblocks?
Sure, and thank you for having me. So my name's Ben Wilton. I'm the Director of Sales Engineering at Fireblocks. So as a role within my company, we deal with a lot of different market players that are touching Web3. So this could range from crypto exchanges through to banks and any other players in the financial markets. So really, as part of my role, I talk to different customers about the use cases with Web3 and how we can build products to make a better financial future.
So, I mean, before we dive into the topic proper, I actually have a pop question for you. So it's would you rather have? So there are 3 options, so just listen carefully. So on the first option, we have, would you rather own 1 Bitcoin, but it's locked for a year? So which means to say you only have access to it and can withdraw it after a year. And the second is a fully paid COE, or what we call here in Singapore a certificate of entitlement. Basically a paper license for you to own a car. And the third is fully in cash, the down payment of a 4-room HDB or public housing. So at current property market prices, we are looking at somewhere between 100 to 120k Sing dollars. Yeah, just want to hear which option you would pick.
Yeah, that's a really interesting one. I think, firstly, on the second point, I don't drive, so that kind of rules that one out.
Yeah.
Look, I think the question is really down to value and perception of value, right?
Yeah.
So for me, I would love to have a house in Singapore, and that would carry, I think, not only what would be perceived as a financial investment, long-term financial investment, but also something that has a lot of utility for me as well.
Yep.
On the flip side, option number 1, the Bitcoin price could go in multiple different directions.
Yeah.
I don't have the magic 8 ball to tell exactly where it would go, but I think I've got personally more data on the utility of that HDB for me personally, but everyone is different.
Yeah, I totally get. I mean, not everyone who works in the crypto space would like to have all their portfolio exposed to cryptocurrency.
Yep.
Yeah. So we're talking about Bitcoin halving, right? And the event that just happened a few weeks ago, sometime in April 2024. Just want to hear how has your crypto journey been for you? Like, how do you even get involved in this space?
Yeah, really good question. So I think from looking at crypto and the sort of like basis of where it sort of came from, you sort of hark back to Satoshi's white paper talking about a new digital currency. And so really the blockchain or Bitcoin was really created to solve a few different financial market problems like inflation. So the ability to hold a particular asset that won't deflate. Also things like double spending. It's great to have a digital currency, but who's to say you can't just duplicate it, like copy paste and start spending it somewhere else, right? So it's the element of trust around that network. Yeah. So I think for me, Satoshi's white paper was my first introduction to Bitcoin. I had friends who were working in mining many years ago.
You're talking about 2012?
This would have been 2012. Actually, a little bit earlier than that. I had a friend in New Zealand who was actually running mining rigs years and years ago.
Very early.
Yes.
Yeah.
But then for me, I've been working in the financial markets for a number of years, and a lot of the concepts of Satoshi's white paper really rang true for me. It's like having the ability to have a digital currency that allows for settlement between 2 people without intermediary banks and fees associated with that. So I think the premise, what Satoshi was really looking for, is bring the power of money back to the people.
Yep.
And I think he's been very successful in doing that. As far as my experience with blockchain technology, I've seen not only the Bitcoin network, but other networks being built alongside it. So
Yep.
Ethereum-based networks, EVM layer 2s,
Yep.
and various other layer 1s, which is now sort of extending that Web3 ecosystem.
Yeah. Let's zone into your rich crypto experience. So, because you're talking about before 2012, and so that's like more than 12 years, you would say. And so Bitcoin halving, we're talking about basically, as the name suggests, a halving of Bitcoin rewards to validators of the Bitcoin network every approximately 4 years or so, which means to say you have gone through a total of 4, right? 2012, 2016, 2020, and 2024. Do you feel there's any difference between the recent one and the last 3 that you experienced?
Yeah, it's a really good question. I would say there's not a huge amount of difference when looking at it from a technical standpoint.
Yep.
It's following the protocol, so
Yep.
it's all part of the plan, which is great.
Tech is good.
Yeah, that is good, and everything's working, which is fantastic. When it comes to the market reaction, I think we've seen some various market reactions. We've seen some, scrutiny on price pre and post.
Yeah.
And then there's also been some external factors around that timing where, for example, the latest halving, which occurred in April,
Yeah.
there was a massive release of the Bitcoin ETFs, both in the US and in Hong Kong,
Yeah.
where maybe some of the activity had been priced in already. So not wanting to speculate on price, but I think that it hasn't materially impacted the price over a long term. So if you take a lot of the noise out of the market cycles from a daily or hourly basis, we've got a fairly sort of consistent curve with the Bitcoin price.
Yeah, and I mean the tech, it's working, right, for the last 12 years or so. And so since Genesis and in Satoshi's white paper, like it's inbuilt that Bitcoin has a maximum supply of 21 million, which means to say there's no more Bitcoin after 21 million. And I think if my math checks out, it's somewhere the year 2140.
Correct.
So like both of us will not even be there already, right? We're like probably dead by then. Like, but I mean, since you have been there, quote unquote, as early as 2012, like, have you had any like, let your imagination run wild, like what would actually happen, like, or in the scenario where all 21 million Bitcoins are fully mined, and like what actually happens in 2140?
Yeah. Well, look, I think it's a very interesting topic. And when you're sort of talking about the halving and what it is, it's halving of rewards. So going back to what Bitcoin rewards are, it's the reward which is paid by the protocol to miners who are part of the consensus layer.
Yep.
So these companies or these individuals are taking Bitcoin transactions, comparing them amongst their other validators, and then doing a piece of work to prove that they're invested in the protocol.
Yeah.
And now this proof of work is effectively solving a quite complex mathematical puzzle.
Yeah.
And it really sort of shows that they're invested to do something in order to participate, which has an associated cost, like the cost of running a Bitcoin miner. There's a technological cost. There's electricity. So as part of it, firms are investing in, really putting a lot of money in for these Bitcoin rewards. Now, previously, they could have got, I think it was 12.5 BTC as part of a confirmed block. Now with the halving, that goes down to 6.125. Really what's happening here is that you're actually reducing that reward that the miners are going to earn per block. Now, yes, there's going to be less reward, but on the flip side, there's more competition as well.
More like with tech advancing, then there's more people trying to either innovate or buy better chips to mine the rewards.
Yes,
and
correct.
so there's more competition, like what you said.
So basically, you've got two different conflicting things here: the cost of mining, which is going up, and the rewards going down. Now, one would say that you're eventually going to have a too great a chasm between cost and rewards that miners are going to walk away. that argument could be challenged in the way that how the Bitcoin protocol was actually built. There is a thing called mining difficulty.
Yeah, the hash rate, right?
Hash rate, yeah. So the hash rate, a Bitcoin block the protocol has been set to say that a Bitcoin block should be mined approximately every 10 minutes. And what the hash rate difficulty does is it creates enough challenge or enough friction for that to time at around about 10 minutes based on the processing power of the miners.
Yep.
So hypothetically, if the rewards are not attractive enough and there's less miners and the hash rate stays stagnant, that difficulty will not actually rise. And so you actually get a consistency across. And as technology becomes more accessible for other players, they will then enter the market looking to get rewards. I would say in some ways, there's been a lot of consolidation of the mining players over the last few years, and this will actually start to more democratize the mining community.
Yep. So, I mean, we're talking about mining and the different mining players. Just like to hear your thoughts on, like, what do you feel or what's your opinion about the current mining climate? Because when we're talking about a Bitcoin halving, means rewards are half, and so profitability to these Bitcoin miners and their respective companies, they're gonna get a hit. They're gonna take a hit, right? In some sense.
Yeah, definitely. And I think it's part of the operating model because it's been so competitive. They've invested in the latest technology just to get that edge over the competitors. Now, do you actually require the greatest and latest technology to mine Bitcoin? You actually don't.
Yeah.
However, to have the highest sort of chance of winning that block and getting that reward, faster is better.
Yeah.
Now, if we sort of see that the rewards are not as attractive, they may look at using that technology for other use cases. So AI advancement and the demand for AI services, they may look at turning some of their infrastructure over to earn rewards through AI processing.
Yeah.
So I sort of think for these companies, they do have choices to redeploy their capital in other investment models without diminishing the capacity of the network.
Yeah, I mean, not just in AI, but like with Bitcoin as a proof of work coin, there are many other POW coins that are out there where they can actually redeploy their mining rigs to go and mine those coins if it's more profitable. I mean, there's a website where profitability, a calculator or something like that, where like even retails could go online to like check out which particular mining rig, the cost of it, and how much before I actually break even. Yeah, but we're talking about mining companies, and like I know in the recent news, like mining profitability in terms of profit margin actually rose instead of decreasing with the recent halving event. So it's like, I think 43 to 50%. But as we all know, with rewards being reduced, eventually some mining companies will go under. Right? So then that brings the question of decentralization. Right? I mean, since you have read his white paper, so that was a big thing that he was pushing for. So like, what are your thoughts on that?
Yeah, look, decentralization is incredibly important for the Bitcoin protocol. What this allows for is no single actor can manipulate the price or the supply of Bitcoin. Now, this is done by a consensus mechanism, which is used by miners. So you have a series of different individuals or companies that are performing validation on the network. So they're validating each incoming transaction, combining them into blocks, and then reaching a consensus that this block has no malfeasant transactions, that this is a secure transaction. Now, on the flip side, if somebody was to try to manipulate the network, you would have a higher percentage outside of your sort of mining operation that is going to say, no, this is not a valid block. So it really sort of adheres to the truth and accuracy of the protocol. So it's incredibly important part of the network.
Yeah, and I mean that then prevents the whole idea of double spending. And in
exactly.
the case where there actually is a 51% attack, the likelihood of that is like very low, given the opportunity cost of not being able to earn the rewards. And yet also the capital upfront that you need to acquire 51% of the network.
It's like, I would say, it's not impossible, But it's highly, highly improbable.
Yeah.
There's so many different controls and factors as part of the protocol that Satoshi wrote in that I think protect the protocol and will ensure its longevity.
So back to his white paper, you've read it like at least how many times? Twice?
3 or 4 times, I think. Yeah.
I mean, that's impressive. I mean, I've been in the space for like 5 years, but I haven't actually read his white paper. But like, I know what's going on, right?
Yeah.
I'm more interested into the white papers of like decentralized finance, and there are different protocols out there. So you would say that his concept of decentralization and how Bitcoin came out as a sort of like a byproduct of what he was trying to tackle, the whole inflation, where money supply is limited, where you can't just print more money. Right? You would say it's a success.
Absolutely, yes. I think, and I would encourage anyone who is listening at the moment to go out and read the white paper.
Yeah, it's a free PDF. You can
free PDF.
Google it.
It's only 9 pages. It's incredibly well written and very, you can consume the information very easily. But also for anyone who wants to look at like the fundamentals of cryptography behind it, it also has that component as well. So I think it's a really concise, valuable paper that anyone can get behind. And I think it's that accessibility that has allowed for other people in the space to look and go, well, okay, here's what we've done with Bitcoin. What else can we do?
Yeah.
And hence all the other chains that we're seeing in the market.
Yeah. And I mean, just to give my 2 cents, it's like, given that the founder himself is like, he disappeared. So like for a protocol or like decentralized company to actually run itself for a good 12 years and it's supported by the community, I think that is a huge success on its own. Yeah.
Yep.
And I mean, just wrapping up the show, I have a last question for you. What do you see as the future of peer-to-peer payments and digital assets in particular?
It's a really interesting one because as part of Satoshi's paper, he theorized that, Bitcoin could be the underlying for peer-to-peer payments. And it has been true. Like, there have been numerous sort of situations which are now celebrated, like the first pizzas that were bought using Bitcoin, the annual event. And I think, this occurred, if my memory serves me correctly, around 2015. And somebody paid, I think it was like $14 million for 2 pizzas.
Yeah, 10,000 Bitcoin. Yeah.
10,000
I mean,
Bitcoin.
the guy is still an avid Bitcoin enthusiast. He still holds Bitcoin himself.
So, look, I think it's proven that Bitcoin is firstly a utility asset, and it maintains value. Now, there is a little bit of value fluctuation, but there is definitely value behind it. So, as far as Satoshi's vision, you've got utility there. So it can function as an asset similar to money. Now, the challenge with Bitcoin at the moment is you're not going to be able to go to your local coffee shop and
at least for Singapore.
At least for Singapore.
Yeah.
Like paying for 1 Bitcoin, 0.00001 Bitcoin for a coffee, for example. The challenge with the sort of peer-to-peer payments is that in order for a confirmation to occur on the block, you're going to be waiting up to 10 minutes.
Yeah.
So there's a little bit of a challenge there. It's like, are you just going to hang around and wait for your coffee to get cold before the payment goes through? So
have a chit chat with the barista.
Exactly. Talk about Bitcoin. So I think what's now happening is that Bitcoin is being used as an underlying asset for other networks that are built on top of it.
Yeah.
So an example is the Lightning Network that has a much faster block rate, much faster transaction speeds. Therefore, you can actually create payments that settle not instantaneously, but within a very short period of time. And this is not only occurring with Bitcoin as well. So Ethereum has a number of layer 2s. There's new layer 1s that are being built at the moment, like Solana, that allow for millisecond transaction speeds. So I sort of see the evolution of blockchains being involved in peer-to-peer payments more and more. And I think governments do as well. they're wanting to introduce CBDCs, or central bank digital assets, and they want to then have different use cases on top, like retail stablecoins. And what will power those networks that we're seeing is going to be the new blockchains like Solana, Polygon, etc.
Yep. Thank you for all your insights. Just like to thank you for joining us on this show, Ben. Honestly, I really love the work that you guys do at Fireblocks. The whole MPC tech, the digital infrastructure that you guys are building for the different digital asset services. And to the audience out there, thank you for joining us and staying till the end. Till next time, where we decrypt the digital space block by block.